Hey, Eric here from 5minuteinvesting.com. And today we want to talk about time frame and what you should expect when you're investing, how long you should plan for, and so on. Now, but before we start, I just want to let you know I have attached the links to the related videos in the description, and you can always check the description for any free stuff I'm giving away. So right now, I have a technical analysis course that is free, so you can go below and sign up for it. So if you want to learn about technical analysis, click on the link below. So today's question: how long should you plan for a trade, and how to avoid bad trade that goes from 1 day to a week or 1 month to 3 months? Now, before you start, it's important to understand why I'm even answering this question. Now, this comes down to, a lot of beginners start off being very optimistic. Now, they might think this idea will realize within a month. Maybe, this idea will realize within a week. Maybe, or even this one day today. Like, for example, the stock will go up by 2% today. Now, of course, it's great if the stock actually goes up by 2%, but what if it doesn't? Then you're going to wait. And if the stock market goes against you and you don't have a good stop loss policy in place, then you're going to be scared and you're not going to be sure to know what to do, and that will put you in a negative emotional state. So what does this mean? It means that let's say you expect something to happen within a week and it didn't reach your goal. But then you're still positive. You still think it will happen. You still believe the stock will go up by 2% maybe the next week. So then you extend your period and you go like, okay, suddenly this short-term trade becomes a medium-term trade, or this medium-term trade becomes a longer-term trade that you never planned for, that you weren't expecting. So that is really bad, because now it means you're second guessing yourself. It means, you're kind of on a time constraint, you're extending the deadline, and you're giving yourself more pressure than you should when you're investing. So instead, what should you do? Instead, you should take the opposite approach. So when I plan for a trade, I always start with the longest possible time frame. Now, that's usually 3 to 5 years. So for example, when I'm analyzing a stock, I think 3 to 5 years in advance. I go like, okay, so right now, this stock has a good uptrend and it's down. So, okay, do I think 3 to 5 years from now, the stock will go up? And if the answer is yes, then I find all the support to support that is going up. And then if the stock goes up faster than I expect, great. If not, I give myself plenty of time for wiggle room. So for example, the best example I have is one of the first investments I made, Tech Resources. Now, this is a big mining company, and I won't go into the fundamental analysis or all the research I did to come up that it is a good stock. But the time I bought it, it was $10. And I know that the underlying commodity price, that zinc and copper, will continue to go up for the next 3 to 5 years. And I expect the price to end up at around 30. So from $10 to $30, right? So, okay, I don't want to think, oh, I think it's going to go there next week. That's ridiculous. I'm not giving myself enough time. Instead, I said, okay, I think Tech Resources will go from $10 to $30 maybe in 5 years or so. That gives it enough time, gives enough time for the company to recover. That gives enough time for the commodity price to continue to go up, inflation to kick in. Basically, Tech Resources has enough time to do whatever it needs to do to bring the company back into a good shape. Now, that is very important because I was expecting somewhere around 3 years. So that means if I double the time, then it's around 5 years, 6 years. So then, okay, I thought to myself, I want to give myself double the amount of time I think it needs, because I'm always optimistic. Now, I don't know if you're optimistic, neutral, or pessimistic, but chances are when you think a stock is going to go up, you are a bit optimistic. So for me, the general rule of thumb is 2 hours. 2 times. So if I think something will happen in 6 months, I give myself a year. If I think something will happen in a year, I give myself 2 years. And guess what? The stock went from $10 to around $28 in 6 months. That means I bought it in the beginning of the year and it went up to around $28 and I made almost 100% on it in 6 months. Now, of course, this is a great example, a positive example, and I would rather the market to give me a pleasant surprise than me trying to extend the deadline, because the market is not moving or other people having like catch on to what I realize. Because you can only sell after everyone has jumped on to the stock. Then once there's no one left to buy, then you sell. So you got to give the market enough time. So if you're trading really short term, I would challenge you to still double of what you think that time takes. Let's say you think this trade is 1 hour. Then give yourself 2 to 3 hours and plan further ahead. And if the stock reaches that price you want in less than an hour, great. If not, you have planned for a longer duration. So you don't need to worry as much. And you can be more relaxed and more type B. And that's it. Let me know if you have any questions below. Give me a like and check out the free stuff I have. Cheers.